is his own kicker, right?
Oh my God, here we are. We are live. I'm showing it live, man, on YouTube. Oh, geez.
Here we are. Okay.
Hey, now we're live.
Did it just start?
Yes.
Oh my God. Okay.
The well-oiled trade the chain machine starts again.
All right. So do we still have Lucas on here?
I'm here.
Okay. I think I'm looking at see the live stream, and I think it recorded. I think it did everything that we did.
Well, why don't you just go in and reintroduce Lucas to everyone in case they may be joining late?
Yes, let's do that.
All right, guys, welcome again to today's episode of Trade the Chain. It is Thursday, May 20th, and you are on with three of these people are just jokers. So I want to introduce, well, first of all, I got the best hair in crypto on Ryan Gorman, as well as CJ from marketrebellion.com. But really special guest today. For everybody who is a member of Trade the Chain, they know who he is. It's Lucas Bradley, one of our members, and a smart cat, and I'm glad we got him on. We had to get him drunk, but other than that, he's going to discuss a really timely topic that's been going around. That's proof of stake versus proof of work, what it is, what it does, the pros and cons. CJ and Ryan, I know, are going to have a lot to say about this as well. So thank you, Lucas, very much for your time. Appreciate it.
Absolutely. Thanks for having me. Great to be here.
Yeah, man. Thank you.
And we're going to jump right into it. So Ryan, why don't you take us away to the legal and the shameless plugs, please?
Can do, Ringmaster. This is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational, informational purposes only. Absolutely none of this is investment advice, and you should not listen to a single word we say. Don't do it. I'm warning you, don't do it. Trade the Chain is brought to you by TradeTheChain.com, a global community of traders of all ages, all abilities, and all skill levels, all using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you too want to trade like a crypto insider, head on over to TradeTheChain.com and check us out. That's the smoothest I've ever done it. I don't know that I'll ever replicate that. Yeah.
Glorious.
Very enthusiastic as well, by the way. And don't forget, this polls from multiple languages. So this is not just the US or European markets. This is China as well. And
well, maybe not so much after yesterday, but the rest of Asia, perhaps.
Yes, yes, excellent points. And then moving over to marketrebellion.com/crypto. This is Monty and myself and our community at Market Rebellion. And with us, you get trade insights and trading education with entries, exits, and stop losses on a weekly basis. We also give you access to our macro portfolio allocations, a pro charting platform with some of our own custom indicators, a trading education curriculum. We just added a course yesterday and plan to continue that. But if you're interested in that, you can go to marketrebellion.com/crypto and try your first month for just $1. So we really appreciate that, guys. We also have a mobile app for iOS users as well. We're working towards Android. It's in the roadmap. But yeah, gentlemen, any thoughts here before we start out?
You know, the markets looked like they were coming back. They looked like they were mounting a bit of a recovery. They looked like there may have been a bit of consolidation around 40K. And then because when it rains, it pours, you know, the Treasury Department decides any crypto transactions over 10K have to be reported to the IRS. I mean, that's not necessarily bad news. It's what's been going on with cash, but at the same time, forever. But the broader markets took that as yet another nail in the coffin, so to speak.
Yeah,
and sent the market down. It's frustrating.
You know, I mean, first of all, I just want to say, watch the episode from yesterday if you want to know how our feeling is on the markets and personally, before everybody floods the chat with that. But to Ryan's point, Ryan, I think it's actually valid that the market is reacting to that news, because remember how crypto was developed when it was invented, right? It was to be decentralized. It was to be anonymous. It was to be so you could live in Fiji all by yourself in a hut and no one would know where or what you were doing. So it's just one more clamp down.
True. But I mean, I think a lot of this, all the reaction too, is coming from like people like, not to badmouth them, but Jim Cramer was on TV this morning on CNBC talking about how Bitcoin is used by criminals because it's anonymous and it's on the blockchain. I'm just like, yo, man, cash, right? Like you look at cash, you can't follow where cash goes, and blockchain's public, it's immutable. And you can literally, anyone can find out where money goes from one wallet to another. It's not that hard to track it. And it's just, I think a lot of misconceptions are still out there, and it's going to be a while before those misconceptions are, refuted. And once we're able to refute them, if we're ever able to refute them, I think that's the main barrier to broader adoption. Right. And it's frustrating when you hear the same thing repeated over and over again.
Yeah.
Almost like he was at the Berkshire Hathaway annual meeting, right? Like he's just repeating some of the same talking points, and he knows better. He owns Bitcoin and he still does it anyway.
Yeah, I don't get into those barroom brawls anymore when it comes to, criminals are the only one that use it, stuff like that. It's easily winnable and provable that that's not the case. So good point.
Jim Cramer, you're welcome to come on the show anytime and we can discuss this.
Oh, I've asked him.
Same.
All right, CJ, it's your turn, kid. Go to the big board. Show us all the love.
What an interesting time. Like Ryan was saying, just as we started to see a glimmer of hope with a nice bullish engulfing candle, we get that negative news coming out. However, something that aligns with almost perfectly here is this TD setup resistance level. So those dotted lines, those are going to be resistance. And that was kind of my trigger to get into a long trade or to take a position and buy this dip. I wanted to see a firm close above this level with a candle, something like that. We just haven't seen it yet. However, we're still getting some bullish signals. We're seeing a bullish divergence in the CCI. If price is going down, why is the CCI continuing to go up? Well, it means that the trend is losing momentum and is losing a little bit of steam. And so, if we close below this level, I'm still a bear. However, if we can firmly close above 42K with strong volume, I think that gives me enough to say, hey, the bulls are willing to buy this with enough confidence. And then pretty much what we worry about between that point is the 45K level. That's been strict support on the weekly chart, likely to act as resistance now on the way back up. And then, of course, the moving average, which is coming down, and it'll probably touch around 49K if we get something like that. So I'm waiting. I'm sitting tight still. I need to see a firm close. It looks like we were going to get that earlier today. Of course, we had this news as well coming out, targeting cryptocurrency, like Ryan had mentioned. So that sent a little bit of a dampening effect into the market. But that's basically where we're at and how I'm positioning myself through this bull market or just our current circumstances. But
the only thing that can hurt that, CJ, is a drunk Elon with a cell phone. To the point that you brought up the article, $10,000 transactions is, I want to ask everybody in the panel, do you think that's too much? Is that overboard to ask at this stage or what?
No, not at all. It's the same thing they do with fiat. Why? Eventually, it was a matter of time. If this is an actual currency, crypto or otherwise, it has to be regulated like one eventually. And whether people like that or not, it's going to happen. And $10,000 seems fair. If that's good enough for fiat, it's good enough for crypto.
I'd rather have it at $1 million, but yeah, okay, 10 grand. That being said, though, Ryan, you allude to the fact that maybe this, listen, it just reinforces the fact this is a recognized currency. And I think that's the positive note that I take away. I don't know that it's a recognized currency. I think it's a recognized asset. Right? No, if you're going to report it on a transaction like a bank, then that's a currency, my man. Okay. I'm just saying. I'm saying it's. I'm not even. I don't care if they look at it as a piece of property. I'm just saying. I think I'm drawing that away as a positive. That's all.
CJ, can you pull up the hourly sentiment chart on the 1 day real quick for Bitcoin?
Sure thing, Mr. Gorman.
Lucas, you could chime in here too, man.
I agree with Ryan. This has been a regulation that banks have had to follow for decades. I think it bounces between 12 and a half or 10 every so often. It was 25 at one point. But yeah, if the banking industry has to do it, there's no reason why other businesses that are quasi-banking at this juncture that provide us, access to these markets shouldn't have to do the same. A lot of Twitter people that are within the industry say this is a good thing that we've got these regulations. They're echoing what you're saying, Alex. This is good because it bolsters the idea that these are legitimate currencies.
Exactly. Sorry, go ahead.
No, I agree with Lucas and Alex, and I think Ryan, you as well. This shows them that they're looking at it seriously. We wouldn't hear anything if we still assumed Bitcoin was going to die and all of those sorts of things. But this is legitimacy in my mind.
And that's just yet another barrier to broader adoption that people keep saying is going to happen. That comes down, right? You want banks to handle crypto? They need to know how it's going to be regulated and how they have to report transactions to the government, because banks have to report everything to the government. So it only makes sense. One thing that I noticed when looking at the hourly sentiment on the 1 day chart, sentiment really kind of tanked after that announcement from the Treasury Department came back. But not only has sentiment started to rebound, but prices also starting to rebound. Do you think, CJ, that we might just see a quick reversal from the Treasury announcement-driven drop today, going into the nighttime here in the States?
Well, I mean, hopefully, right? But we haven't closed above this level. I mean, until we do that, I can't have full confidence that buyers are willing to step in and buy this. Now, granted, if you look at certain statistics like the SOPR from Glassnode and specific short-term holders, we've seen a ton of liquidations. And typically every time we see that, price does rally. So I am still bullish on price, but I just have to have the discipline to wait for buyers to step up with confidence with some strong volume and buy above this 42K level. I think if they do that, that bodes very well for a reaction rally to possibly 45 or 47K. As for the weekly chart and where this overall trend is going to go, if we've hit a bottom for sure, I think that still remains to be seen. I still think that, I want to see the buy pressure. And until we do that, I can't rule out a floor.
And that's exactly what we talk about too, at both on Trinity Trading and Trade the Chain. CJ, when we're on that show going through our picks, it's the affirmation, right? So you want to get that conviction in your head, even though sentiment may be moving up, maybe you have an engulfing bullish candle, you want to get that conviction, that affirmation before making a move. So extremely smart. One of the things I want to ask everybody is if you are for or against the $10,000 crypto reporting to the Treasury. Throw it in the comments or the live chat. I'm curious to see what the consensus is out with the general community. So how about this real quickly before we go over to Lucas, who's smarter than all of us, Bradley.
Combined, smarter than all of us combined.
Can we hit the coin screener page on the daily or the 1 hour projection and give the viewers like the top 5 or pick 5 coins that are actually popping on sentiment today?
That was a good shot of me there. That was nice.
Yeah, right.
Yeah, I'm gonna go back and get that one. That's gonna
Looking
be my
good, Luke.
profile pic.
Looking good.
Wow, Monero. Look at that. The world's leading privacy coin coming up, being the most bullish in daily sentiment. That's very in line with the narrative.
Wow.
Makes sense. Yeah.
And folks, there you go. That's your free pick of the day right there.
That and Velis. Does anyone know what Velis is? I've never heard of it before.
I've heard the name being thrown around there. I haven't dug into it to figure out any more than that.
Whatever it is, it's doing well. Or will do well.
Well, one of the things that I've quickly learned is that when the stable coins hit the top of that 1 hour or daily sentiment chart, we're having a hurt market. All right, cool. Lucas, let's get over to you, buddy. proof of stake versus proof of work. It would be, hearing you talk about this stuff it's so simple and easy to digest. I really enjoy the patience you have when you do, and the clarity that you bring to it. But, one of the things I just want you to briefly explain, if you could, what each of them are, for the folks out there. And then we're going to delve into the pros and cons, because obviously the Elon Musk tweet that ruined everybody's springtime Christmas here in the bull run had a lot to point towards, carbon footprints and things such as that. So I hand the floor to you, sir. Proof of work.
Absolutely. Proof of work. So yeah, let's go with a little bit of a history lesson first, because it's kind of, we have to go back to talk about what proof of stake is and why it's important. We got to know what proof of work is. Okay, the whole idea behind cryptocurrency, especially Bitcoin, is that we would have this decentralized ledger. Whereas before we had PayPal, that you could send money from me to Alex and Alex back to me, PayPal would be the one that would finalize that transaction. It would be like a bank that says, okay, we moved this money from this account into this account. To have a decentralized ledger, an ability for you to send money to anyone in the world, you have to come up with a way for consensus, because you don't have one entity that can then say, yes, this money was moved from here to here. Lots of people tried to make that happen over the course of actually decades. This wasn't a problem that was solved in 2008. Lots of people tried. And the Nakamoto consensus is kind of the important part of that solution. And it basically boils down to how do we have a bunch of computers that are verifying transactions on a chain that's publicly viewed? Who gets to decide what happens? The Nakamoto consensus, or let's call it just proof of work, is a consensus mechanism where you have a mathematical problem. Okay? And that mathematical problem is so difficult that the only way you can solve it is by guessing, by literally guessing billions and billions and billions of solutions a second. Okay? And everyone else on the network is kind of looking around saying, okay, does anyone have a solution? And when someone finds a solution, with Nakamoto consensus, they stand and go, I found a solution. And then that person is declared the winner. They kind of wrap everything up. Everyone says, yes, that is the correct solution. And they go right back at it. And they keep churning away and try to find the next answer, because finding that answer means you get the block. Okay? With the work, so the work is trying to find that solution. And the person who finds the solution then is the winner and gets to do the kind of wrapping it up. It's great because a lot of people talk about game theory. It means no one can cheat. The network doesn't allow people to cheat to find that consensus. And everyone can participate. Anyone can go out there and start mining things if they've got enough processing power. So when this first came out, it was great. You can just use your regular computer and do this. And people were like, gosh, this makes the network stronger, and I can make money at this, and you can participate. Over the years, though, people, myself included, came up with ways to increase their hashing power, or their ability to guess more numbers faster. And with that, it kind of took the power away from the individual, and it put it in the hands of people that could have mines and cheap electricity and better hardware. And as that happened, as that decentralization became more centralized by the people that could afford the more expensive hardware, the cheaper electricity, very smart people started coming up with, okay, well, so what would the next step in this evolution for consensus be? How can we take this, instead of, if this keeps going on this trend, how can we make sure that the regular humans, the regular people can participate? And proof of stake was one of those options that came up. What is proof of stake? Proof of stake is a consensus mechanism that centers on the idea that one validator, one node, one stake pool will be selected for every little block out of a collection of these different nodes. Okay? So how do you do that? Is it random? Do you just select a node at random? Well, that has its pros and cons. Proof of stake says, let's put importance on a node by the amount of money or tokens or cryptocurrency, whatever that is, that individual holders give that node. In other words, if I am bank ABC or node XYZ, and I convince all of you to give me some tokens on the chain, that gives me weight or importance on it. And then if the consensus mechanism selects me, I do the work. don't have to be guessing numbers, don't have to be spending a lot of electricity or hashing power to make that happen. I get to then decide, okay, here are the transactions we're putting in this. Everyone else still verifies it. Everyone else still double checks the work. But we kind of skip that step of choosing all the trying to solve the mathematical equation or choosing numbers or that kind of quasi work and electricity spent. So there are basically two different methods by which you can achieve consensus on a blockchain.
Okay. Wow. I picked up a lot of what you just put down.
Yeah, I tried to get a lot out there.
Crawling around on the floor looking for some of the pieces that I can't find yet.
Let me give it really simple. Proof of work is consensus is defined by the network doing a lot of work. And in this sense, that is spending electricity and hashing power, computing power. Raw computing power is what decides the winner is. In proof of stake, the amount that's staked on different nodes is what decides who the winners of that block are. With a little bit of randomness, a little bit of weight thrown in for, hey, did you cheat in the past? Did you, are you a good guy? Those types of things. And different platforms have different ways of doing that. But that's what it boils down to. Do you want a random number, chooser doing a bunch of work, or power to the people, whoever stakes the most, etc., gets to decide.
Okay. So then now that, knowing both sides of the work processes there, and by the way, I want to disclose, or I'm going to ask you to, are you a Bitcoin maxi or are you equal opportunity crypto investor?
I am an equal opportunity crypto investor. So if I put on my hat of giving advice to people, right? The first thing I tell them to buy is Bitcoin, because it's the big dog. It'll get you in there. It allows you to kind of watch the markets. CJ gives amazing analysis on the technicals, and Bitcoin. It's uncanny how close he and Monty can get to predicting those things, right? And that's important. That kind of captures people's attention. If I put on my futurist hat, I say, don't buy Bitcoin. It's a dinosaur. Proof of work is dying. Proof of stake or derivatives thereof are the future.
I couldn't agree with you more, Lucas. It's too slow. It's too congested. It's too expensive. And then you have another option that just works, right?
Well, there's pros and cons to both. And it's important to know what those pros and cons are. In my technical estimation and expertise, proof of stake has fewer cons right now and a hell of a lot more pros. Whereas proof of work, we're starting to see it free at the edges, and we've seen it free at the edges for quite some time. There's proof of stake is a logical, it's not revolutionary, it's evolutionary of blockchain. It's another method by which we can reach consensus.
Okay. CJ, any comments so far?
Yeah, I'm not a big Bitcoin maximalist. I'm in kind of the same camp as you, Lucas. However, a common argument that I see for the use or consumption of so much electricity for proof of work is that the network needs to be that secure so nobody can game the system. So it's kind of like, do you want to build a vault out of plywood, or do you want to build it out of steel with a huge amount of computing power? What's your opinion on that?
I think that it's a straw man argument. It was a very important argument about 10 years ago. A lot that the idea that the argument was to convince people to not use the banking system. Why do you want to use this? Because it's decentralized. No one owns it. Well, what enforces the fact that no one owns it? And it makes it financially extremely difficult to game the system, because you have to own 51% of the hash rate, the hardware, or you have to convince a lot of those other people to kind of game the system with you and kind of tear it down, right? It's a great argument. The problem is right now, proof of stake also does the same thing without having to have you build that house of steel, right? Consensus on proof of work systems is baked into the software. The work that's being done is a part of that protocol, the method by which consensus is reached. In proof of stake, that protocol is also built into the chain. So if we're going to compare apples to apples, you can either do the capital expenditure on a proof of work system to achieve 51%, which is going to be really expensive, or you could spend the capital to buy the coins or the tokens or whatever that is on a proof of stake system, which is also going to be radically capital intensive. So the resistance level there is the same. You've got to spend a bunch of money to take over the system. And that's what's incredibly difficult.
When it comes to that person who I don't like to refer to, but he has initials E and M in his name, and he's dumping on everybody with his tweets. So when it comes to his argument and what he tweets out, that and what he did, that was a catalyst for us going into this little trough that we're in. Do you agree with him wholeheartedly, disagree with him wholeheartedly, or is there some foundation to his thought process, or there's a D? Was he just drunk at a nightclub?
I do believe that what he is saying is a good argument. He brings up some valid criticisms of proof of work systems. What infuriates me is he's being radically disingenuous when he then starts pumping Doge. Doge is still a proof of work system. So if he's making that argument, he's undermining his own, game or gamification, or I try not to look into his mind as to what he's doing. I'll be very clear, and because you can see my tweets, I think he's a narcissist and an egomaniac, and I think that his days of being a true engineer are way, way gone. I think that he does these things to make money, and I do not think that he has cryptocurrency or decentralization, or just your average person out there, they're what's good for them at heart. I do not believe he does. So now I can say that, so real quick.
Yeah.
But it's different for me to have a personal opinion about him and what his intentions are, and to then turn around and say he makes a good argument, because he does. You can criticize proof of work and its use of electricity and hash power and quasi-centralization of miners, and still disagree with them about the rest of their proportions.
So his criticisms on Bitcoin are valid. They're not, mostly. I don't know that I agree that it's a burden on the environment, but I think he's mostly on point with a lot of his criticisms. The thing with Doge, and this is a conversation that Alex and I were having not too long ago. He's in a nightclub, he comes out, he's in the back of a car with someone, he's like, hey, let me see something cool. Want to see something really cool? Watch this. Yeah. Right? And he fires off a tweet, he's like, watch what happens to Doge. Right? And
I totally believe that too, Ron. I really do.
I do too, and
I think I've done that. The only problem is nothing happened to Doge.
Exactly, right? So he's one of the few people in the world who can be in the back of like Maybach or something and say, hey, check this out. This is awesome, right? And he's like, and fires off a tweet. And like a million people listen to what he says because they don't know any better, right? And I think, to your point, perhaps he is a narcissist or an egomaniac, or maybe he's taking a piss, right? He's just having fun because he can. And at the end of the day, the whole Doge thing is just obviously a joke. He even gave a wink and a nod to it on SNL, saying it was a hustle. But I do believe that when he's looking at Bitcoin and his criticisms of Bitcoin, he's not the only person who says these things. And I think that he does actually believe them, and there is some validity to them for sure.
Here's a great thing. I got to recognize Snooch in the chat. Thank you very much, Snooch. Appreciate that. But Lucas is a regular Joe. Well, he's not a regular Joe. I say that in reference that, he's not one of these idiots who comes on YouTube like we do. He's a regular, he's a crypto investor. But the question is, what we're all in the US. What trading platforms do we use regularly? And Lucas, you're a relatively prolific investor. You do your stuff. You know your homework. What do you use to trade? What platform?
Kraken is probably the one I go to the most. It's a centralized exchange. As a decentralized exchange, I like MetaMask in order to swap out tokens, because it goes to lots of other dexes to try to purchase. Voyager, I think their app is the best mobile app out there to utilize. But those are my main three. I tend to kind of stay within some pretty tight guardrails.
During the crash yesterday, that's the wrong word to use. During the heavy rainstorm we had in the markets,
The retracement.
the retracement we had yesterday. Just curious, because I do not use Kraken. Did Kraken go down yesterday?
Yes.
It did. Okay.
FTX was the only one I heard of that basically was able, they didn't stay up the entire time, but they were up the most.
Interesting. Hey, by the way, did anybody see that news? We brought them up yesterday, BlockFi, and some of the liquidation issues that were happening because the app wasn't working for people to top off collateral. But did anybody see the news that came out where they mistakenly paid the rewards in Bitcoin rather than in stablecoin, and now they want the money back and they're sending emails to sue people? Again, unconfirmed. BlockFi didn't send me a thing saying that.
I've seen a lot of news about that, and I tell them to go fly a kite. That's my Bitcoin. It's already out of my BlockFi account and through the laundromat, and it's gone. Right? They would never see it again. Right? Like, why? That's a bank error. It's like that goes back to like the earliest thing you learn in Monopoly. Bank error. Right? It's just no. They're not getting that Bitcoin back. That's.
I think it's massive amounts though of Bitcoin they sent out.
But that's their problem, right? Like that's my Bitcoin. If I don't even have a BlockFi account, so no one's coming after me. But if I did, and they sent me that Bitcoin, it would be through the washing machine and out the door.
People had screenshots of like 708 Bitcoin, and it was supposed. No, I'm not joking. There was
amazing
screenshots of like 700 plus Bitcoin being sent to an account for a reward when it should have been $708 in a stable coin. I don't know if anybody can do the math on that, but
that's like $2.1 million.
It's $28 million.
It's $28
BlockFi, that's got to be off chain. That's got to be just like, hey, these are your rewards. You can withdraw them sometime, but if those are real and they're being withdrawn, BlockFi's done.
Again, it's unconfirmed. It could have been Photoshop, but it was.
I've seen reports about that, and like the whole thing about Bitcoin, right? It's like, the transactions aren't reversible. You send it to the wrong wallet on MetaMask. That's not your Bitcoin anymore, right? So that's not their Bitcoin anymore, and people don't have to give it back to them. I mean, I'd refuse. I'd go to court. I have $28 million to pay my legal bills. I'm going to win that case.
I don't know if you guys saw this when it happened, but Citi, and it came up in me looking at this BlockFi fiasco that's been going on. Citibank had accidentally sent, I believe it was like $90 million to an account erroneously. And they had to go to court because the person whose account it wasn't giving it back or hadn't given it all back. And the court ruled against Citi, and the person who got, who retained some of that $90 million or so, they kept it.
So yeah, you have $90 million to pay your legal bills. You're going to win that case. Like, I have all the resources in the world if I can pay $90 million to keep my legal bills, because I still have $1 million I didn't have before if I spend 89. Right? I don't care. Just yes.
All right. Today's a special day because we have Lucas here, and I want to get as much out of him as we can today.
Alex and I always take this off the rails, so sorry about that.
No worries. I want to get to your opinions on ADA versus ETH, but first I want to ask you a bit of a loaded question following up on proof of work, and that is Bitcoin centralized? That's
a great question. And while I don't believe that it's centralized, I think that because of this, and I always use the word centralized, because of the centralized nature of mining, it is not as decentralized as it could. And it is my thesis that any proof of work system would always end up in that manner. In other words, that the hashing power or the computing power would always end up in the hands of the few. And that's one of the many reasons why we need to move away from proof of work systems. I believe that Bitcoin is more of a centralized system than it is decentralized, in that miners have the power. It's interesting how people talk about Bitcoin in terms of who has the power there, and is it committers to the code? No, it's the miners. I don't care how much code you release. If the miners don't start switching over to that version, it is not. It does not become part of the chain. The miners have the power. Now, conversely, and then there's some counter arguments to proof of stake there, and I don't want to go too far down that road. But there's some protections to where that same thing doesn't happen in cryptocurrencies like Cardano ADA, by the way. That validators can only have a certain amount of coins. If they have more coins than that, they're penalized and will not be selected to mint blocks. So it's important that the consensus method protects the end user on the whether it's proof of work or proof of stake. It's important that there are consensus mechanisms to protect the end user.
Before we get to ADA, I want to ask you as well about one of the main criticisms of Bitcoin, which is the centralization of mining within China. From your experience from mining back in the day, what's that like? You know, we talked a little bit about this in Puerto Rico, but, you know, is there a clear advantage as to being in China as a miner? And do you have difficulties being outside of China as a miner?
100%.
Let's give a little background to this, so real quick, all right? So for the folks out there, so everybody knows, both CJ and Lucas come from a mining background, or you know that they did mining, they participated in it early on. So I just want to let everybody know that you two, you know, you got your hands dirty in this.
Also, before you answer that question, Lucas, I'm wondering if what the Chinese government said earlier this week, regardless of the sensationalism of the news reports, what impact they may have on that that centralization of mining in China going forward.
Wow, that's a hard question. Let's touch on CJ's first, but I'll come back to that.
Okay.
Yes, to answer your question, CJ, there is an inherent advantage to doing your mining in China. And the number one reason for that is because that's where the hardware is manufactured. The specialized hardware that comes out, ASICs to be very specific, and PCB boards, so the specialized processor and the board that it sits on is mostly manufactured in China or Southeast Asia. Now that's because your iPhone is manufactured there. You know, Texas Instruments stopped making electronics in the 70s and 80s. We all moved our electronic Intel as well. This isn't anything new. This isn't just because of Bitcoin. But because it's manufactured there, you want to be as close to the manufacturer as possible, because then getting it on a ship, maybe it could be lost in transit. Maybe your hardware could be pre-mined. It behooves you to be there at the source. And people that try to say that, oh, only the mining pools are there, I would suggest you look at the history of those mining pools. They didn't always used to be there. They moved there because the hardware is there. Now, to come back to Ryan's question, this isn't the first time that China has issued this guidance, and it probably won't be the last time that they back off it. The difference this time is that China does have its own central bank currency this time, and they are pushing it strong. So this could be impactful. Could they stop it? No. Could the United States stop it in the United States? No. But they could make it very difficult to get on and off that subway, on and off the chain. If you got a bunch of Bitcoin, at some point you want to go back to fiat or vice versa. That could be difficult within tight restrictions within China. So yeah, it spooked markets. I definitely believe that.
All right, we're going to follow that up with another hardball. We talked about ADA and versus Ethereum and why you're so bullish. Could you talk about the difference in approach that ADA has taken to their blockchain as opposed to Ethereum?
Ethereum tackled smart contracts first. And that's in a way really, really smart, because that was the bleeding edge need. Like, we've got a good proof of work mechanism in Bitcoin. Let's take that code and then try to bolt on smart contracts. And we all agree, this has been an enormous success. This has been one of the largest breakthroughs that we've seen in computing in Nakamoto consensus is up there, but to a certain extent, I think that smart contracts are even more making that work. But in many ways, it's a proof of concept, because they didn't think about necessarily what came next. It was let's go build this. And as a software architect and engineer, as a big time nerd that's been programming a long time, yeah, you want to jump in feet first and get something working. There's nothing more exciting. So I do not blame them for that. Cardano saw that there would be pitfalls to that, much as like we all knew that there were pitfalls to proof of work systems. We all knew that we'd have to redo. No technology is infallible. You're always going to have to revisit it at some time. Cardano took a couple steps back and said, okay, how can we future-proof this as much as we possibly can? And they decided to tackle decentralization first. Let's make this not a proof of work system. Let's make this a functional proof of stake system, and then move towards smart contracts, then move towards scalability, then move towards all these other things. And let's do it in a very, shall we say, academic approach. And I'm not an academic by any means. I like to make fun of academics sometimes, but it honestly, it was a very interesting approach, and it's starting to pay dividends.
What do you think is going to be the catalyst for projects really coming on, building on the Cardano platform? I mean, it's something that people have been waiting for ever since Charles, came out with Cardano. And quite honestly, it's almost running the course. There's a little chatter now about things, but still waiting to see. But it's kind of running the course of ETH 2.0. Some people are starting to get a little fatigued.
I think it's a two-pronged thing. Smart contracts have to be there. And not necessarily because everyone needs them. Cardano has native tokens that don't need smart contracts right now. That is possible. But smart contracts are going to be that. But let's be absolutely clear here. What's more important is low transaction fees. That is imperative to any smart chain in the future. It's got to have small transaction fees. And that's why proof of stake is so important, is that you're not paying the overhead for all of that work that's being done, because miners are holding all the cards there. One of the reasons why we see so many problems right now with proof of work on Ethereum is high gas fees. And to come back to CJ's question, why am I bullish on Cardano more so than ETH? And I own both, to be clear, I own both, is that I think that we are all going to see just how much power miners hold in the next 6 months. NVIDIA offered guidance on their 2022 hardware sales, specifically for proof of work on Ethereum, and it's over $250 million. They're releasing specialized hardware, not video cards, specialized hardware. If a blue chip stock, if a major corporation like NVIDIA thinks that they're going to be on proof of work through 2022, I think that people really need to, and this won't be, Vitalik, this won't be his fault. This won't be anyone else's fault. I'm not assigning blame. What I am saying is that proof of work can be dangerous when so many people are making so much money. The status quo usually wins.
Alex, that's been a criticism back to the old chestnut, I guess, that I've said before, of saying that people don't build on Cardano. Projects are building on Cardano. They have a deal. I forget which country in Africa they have a deal with.
Ethiopia.
Yeah, with World Global Coin. No, I get it. I'm just saying it's not coming like Ethereum's did. It's a little slower.
So it's a great criticism. It's a very valid criticism, and that's kind of what I wish that we could get back to. We've all been so successful, and people have made billions of dollars in this. And when someone makes billions of dollars on something, they kind of hold it like a brass ring, as like the truth of God. Look at some of Michael Saylor's comments. I mean, it's crazy. There's so many planets. You kind of lose the forest for the trees. I think that if we all take a few steps back and look at what cryptocurrency and decentralization gets us and makes a better world, then we should be trying to strive for better technologies. We should be trying to fix things and make everyone's lives better. And I think that
you when you're done, you need to talk about Michael Saylor to Ryan Gorman. I just wanted to say that so
they're BFFs. They're BFFs.
I was going to say, I just by default reflexively avoid anything Michael Saylor says. But I think, with Cardano, the old line that no one's building on it, I think is unfair at this point. And I've said it forever, but projects are building on it. Governments are using it. And, despite, I guess, my disagreements with how Charles Hoskinson may publicly face and interface with people who criticize what he's doing, at the end of the day, Cardano, it's well positioned to potentially overtake ETH. It wouldn't surprise me if it did. And, Patricio, who's in our community, has been beating this drum for a long time and saying over and over again, projects are building on it, projects are building on it, they're coming. Look at what the US government did, the regulators with crypto regulation. You have all these other governments who are regulating crypto early on or attempting to and making mistakes, and it's just not really working out, or building these sandboxes. The US government's quiet for a few years, just kind of lying in the weeds. Enforcement action comes out every so often when there's been obvious fraud. But all of a sudden, we're starting to get a lot more clarity this year. Things are starting to be less foggy. And I look at Cardano the same way. There's going to be a quiet period, and then all of a sudden, there's just going to be an explosion of projects on that blockchain. And, I could be wrong. I've been wrong before, and as everyone in the comments will tell you. But I think that we're not too far off from seeing Cardano be one of the more active blockchains.
I think you're absolutely right, Ryan. I think there's going to be an explosion of projects. I'm just, listen, I'm just playing the emotional game here, right? Of the wait and get frustrated. And that's just how I feel personally. I think Cardano has a great chance of, I don't know, potentially some flippening happening. I don't know.
Okay,
Lucas,
so
what do you think about the flippening?
I want to get one question in before we go on to that, because we will get to the flippening. From a programming perspective, is there a reason why people would shift from ETH to ADA? Is it more flexible? Is it easier to write new programs? And then secondly, do you expect ADA or ETH to flip Bitcoin? And
one of and Charles, the founder of Cardano, Charles Hoskinson, will admit this. Choosing their programming language for that, he kind of goes back and forth. But he has said that it was one of the bigger mistakes they've made. Haskell. It's an esoteric language. It's more academic. It doesn't have the tooling that other languages do. I personally think that they are 3 years behind, 2 years behind, because they chose that language. I think it was the wrong move. I think that if they would have chosen another major language like even Java or C++, C or C++, they would have had a million other Bitcoin programmers out there jumping on. Go would be another one. Pascal, it was the wrong choice. So to answer your question, right now, smart contracts, the premier release will be written in Haskell. And there is a solid learning curve there. Now, right around the corner after that, there's going to be a couple of toolkits that are released by a third party, and it's actually really, really cool, where you'll be able to write your smart contracts in basically any language. Java, JavaScript, which is frankly terrifying to me in some ways. But hey, let's go. Let's see what happens. Go, I believe, is another one. That's when the doors really open. Now, to back up a few steps, Ethereum also has those different types of languages where you can write a JavaScript contract and it translates into the network. So at first, I think that barrier to entry is going to be larger than Ethereum because it's Haskell. It's not going to be, and learning that is, so not only are you learning a new transaction model, which is slightly different on Cardano than on Ethereum, you're also learning Haskell, which when you've been programming as long as I have, it's just syntax, but it's still resistance. It's still a little difficult. So at first it's going to be harder, but then, as time goes on, it'll get easier.
the flippening.
I'm very bad at predictions because I always think, oh God, this is obvious. Why isn't this happening now? I wanted to make a prediction that Bitcoin would never hit $150,000 per Bitcoin, and that ETH and Cardano, Solana, all these other chains would catapult past it because it offers value. What I will say is that it is inevitable that a smart contract platform will surpass Bitcoin. And it's May now. Unless we have some strange liquidity event worldwide, like in equities, I think that happens within 12 months. Whether it's ETH, whether it's Cardano, whether it's Avalanche, Solana, there's some great stuff out there. I don't know who it's going to be. That's why I own a lot of these. But yes, it will happen because the future of money is in smart contracts and in DeFi.
you rattle off all those chains, and all the great movements forward that are happening. I do agree with you, and I don't think we're ever going to see a 60% Bitcoin dominance again, ever. And we're already, CJ, what are we in the high 40s right now on Bitcoin dominance? There's too much good stuff happening.
42.
42%. That is an unfathomable number that we would never have thought of. Let's even rewind a year ago, or a year and a half ago.
So if Bitcoin with the market dominance, right, we're looking at that, and that's always been a statistic or a ratio that people have looked at. If Bitcoin recovers up to say 70, 80, 90K, it hits that 100K or 150K that CJ has said it might hit by the end of the year. You really think that the dominance won't go back up to like 60, 70%?
No, because it's exponential macro view, right? So if it goes up, listen, if I'm no Marvin the mind reader here, but we all have our own predictions.
The mind reader.
we all have our predictions, right? And I do, as much as I criticize ADA or Cardano, I do agree that ADA has a great chance of being an $8-10 range at the end of the bull cycle. Mm-hmm. I think Bitcoin won't go as high as many people expect, but I'm still valid in the 125 range. So you're going to have a lot of these other coins that are going to rise just like Bitcoin will rise. And so the dominance change won't fluctuate like that. It'll all just, as you like to say, Ryan, I haven't heard you say it in a long time, a rising tide lifts all boats, and this will lift all coins equally. So I think dominance stays about the same.
Huh. Okay. I don't know that I agree Bitcoin's going to go that high, but okay.
ETH dominance is around 18.5%, which is pretty much as high as it's ever been as well. My last question.
Wait, CJ, one more question. Where is it at in compared to like what's the market cap as a percentage of Bitcoin's market cap? Just out of curiosity.
Here, let me pull up coin market cap.
A flying raccoon lifts all toasts.
So the market cap. Market cap of Ethereum is 322 million. Mm-hmm. The market cap of Bitcoin is 745 million. So it's almost getting halfway, very close to just under 40% of Bitcoin's overall market cap. So, and I'm not going to, like, Doge's dominance over the market is like 3 or 4% as well, or at least it was when it was pumping. So like weird stuff is happening in the market right now generally. But I want to talk about BSC and the exponential explosion we saw in yield farming, things like Pancake Swap, things all across that chain. But it's obviously centralized. Once ADA and Cardano ADA and Ethereum get their stuff together, they're going to come down in fees as well. And they're still likely going to be decentralized. So what is...
Don't talk about BSC though and the explosion it's had without talking about the problems that it's currently having.
Well, that's what I want to ask Lucas. What do you see being the longer term outcome of a centralized system like BSC versus something like Cardano or DEXs that would be built on that or Ethereum? Because it seems like if those high transaction fees are essentially solved, there's no real reason to build on BSC.
And that goes to my second point earlier, is that transaction fees are going to be the winner here. But all things else being equal, which I think that BSC could get their fees as low as Cardano, because honestly, they own the servers. They would basically just make it, free to do transactions. But look at what the guidance we just got from China today. Look at the guidance we just got from the United States government. Binance is not a Chinese company. But a lot of their executives, a lot of their servers, they're in Singapore and they're in a couple of other countries. The Chinese government, the takeoff of Binance has been because of the Chinese market. And it started as that. And if the Chinese market started to clamp down on that company doing that, it could be catastrophic for Binance. The same thing with Bitcoin, but Bitcoin is sort of decentralized. What if Binance had to start moving its servers here? What if they start seeing interruptions? We've seen Binance shut off withdrawals and deposits recently because of traffic. With truly decentralized chains like Cardano, like others out there. They're truly and fully decentralized. And to be true, Cardano isn't completely decentralized yet. They still have to have a couple peer-to-peer things released, which will come out. And people start having some of the headaches with centralization of a company that literally owns the system. They'll start to see that decentralization is the way to go. But that'll take time, like anything else. That'll take time. But in the short term, people only care about low fee, utility and low fees.
Yep. And a couple things I just want to say from just from a market investment perspective overall. So once again, this morning I was bobbing with our good friend Rob in the ocean this morning from Digital Asset News. And we were talking about the market. We were talking about the state of it. And, you know, hey, what are we going to discuss on YouTube? You know, I mean, you guys talk about the technicals and I try to talk about the fundamentals and stuff like that and the sentiment. But, you know, I think it brought up the internet. And, you know, that everybody likes to bring up, which is the internet in 2000, 2001. And what I believe is going to be the topic is the fundamentals. I think we're going to go back to fundamentals now. I think we're going to go back to saying, listen, you know, once this bear market is over, everybody just cares about price right now. And they care about low fees because the amount of swap trading that they're doing, trying to arbitrage their way to millionaires. And that's fine. There's nothing wrong with that. The four of us on the show are guilty of that too. And it's not a bad thing. But when this all shakes out and the weak projects fall, it is going to be about those Amazons and those eBays that walk out in the end. And so we are going to be transitioning back to a game of fundamentals and who's building the good stuff. That's all. I just that was more of a statement.
Who do you think is going to be the this market's pets.com, Alex?
I thought you were going to ask me the other way, because that would have been much easier.
That's why I didn't ask it.
Who's going to be the pets.com? And for anybody who doesn't know, and most of you are young, I think, we're old men, or at least me and Lucas are. But for those who don't know, you wanted to say something to that, Lucas?
I was going to stir the pot. You want some controversy and have some people coming for blood for me?
Yeah.
You know?
Yeah, get it.
I think Chainlink could be in trouble. I think that their utility offering, if Ethereum doesn't meet its dates and other chains start climbing up, they're going to have to shift really, really quickly. There's very smart people doing some very smart things, but they're also aggressively religious about their offering. And if it's challenged, they might become like the next, IBM in terms of what they offer and where they offer.
That's the new sock puppet downfall, pets.com?
It won't be like that. Again, I think that, one of the reasons why I got out of mining in 2013, 14 was because of Dogecoin. And that stupid thing is still alive. So no, I don't think that we're going to see too many of these die, but Chainlink could have some real issues if they don't.
Ryan, I have my answer real quick.
I was going to give you more time to think about it if you needed it, but go ahead.
I'm sorry to say, folks, and this might be even more controversial than Chainlink, but I think the next pets.com, the obvious choice for pets.com is Sheepcoin.
How dare you? How dare you? The biggest holding.
We can't fail to recognize the major difference between an actual business like pets.com that requires revenue to stay alive. Vertcoin was one of the proof of stake coins I mined over the bear market and, earlier on in my mining career. But that thing was 51% attacked multiple times over the course of the bear market. It's still alive and trading, and went up 40% in one day off of a pump the other day. You cannot kill these ghost coins.
DJ,
I know you can kill.
Ethereum Classic was 51% attacked 3 times in 1 month, and it went to hundreds of dollars.
You know what coin is going to die? Pets.com death? BSV. Craig Wright is determined to drive that thing into the ground. He's
Better
doing
watch out.
everything he absolutely can to drive it into the ground. It
I
will
think
not
I saw him in
survive.
the chats earlier, Ryan. I'm just saying, watch out.
I used to do PR for Bitcoin Association. I know all of them. I don't care. That coin is not going to survive.
All right, folks, we've been doing this 59 minutes now, and obviously we need to get jobs or something. Well, Lucas has
Hobbies, lives.
On that, before I shut the door on this, Lucas, the most important question of the day, if it had to be one, pina colada or margarita?
Pina colada. Tequila sends me through time. Like I'll be 2 weeks ago. I'll be tomorrow. I'll see my own death. Like I'll be then, Ryan Gorman will swim by me in the pool, and we're hemispheres apart. Like it's no tequila. I'm good.
Beer or dark rum in the pina colada?
Oh wow, dark rum. But I also hate coconut. I'm one of those weirdos that I hate coconut. So,
but the dark rum is the right answer. Absolutely. Yeah.
All right. Well, that's why we love Lucas, pina colada. Folks, thank you so much for watching. We love you all and appreciate it every single day. Don't forget to visit marketrebellion.com and /crypto and tradethechain.com. It is important that you have the right tools when you're going through a market that you don't like, so you can see those glimmers and pockets of light.
Now more than ever, Alex, got to know how traders are thinking, right?
Yeah, 100%.
Any insight into it, any window into it, it helps.
Absolutely. And that's why we have people like Lucas, who are the smart ones of the bunch. And
Lucas and CJ, for sure.
And CJ, yeah.
Wow, just bolted on at the end, Alex. Well done.
All right, folks. Thank you for watching. Don't forget to smash the like on the way out the door.
Also like button. Hulk smash.
Subscribe if you haven't, and we will come to you tomorrow again live. I think that people watching us trying to go live is the most entertaining part of their day. They don't care about what we say. But hang on to those handlebars.